China's industrial output had the weakest start to a year since 2009 and lending and retail sales growth slowed, toughening challenges for a new leadership that wants to narrow the gap between rich and poor. Production increased 9.9% in the first 2 months and retail sales rose 12.3%, government data showed March 9, trailing economist estimates. New local currency loans in February fell to 620 billion yuan, $99.6 billion, the People's Bank of China said yesterday, lower than the estimates of 27 out of 28 analysts in a Bloomberg News survey. Strengthening U.S. demand after the unemployment rate fell to a 4-year low may help incoming Premier Li Keqiang achieve the 7.5% expansion in gross domestic product sought by policymakers entering the final week of their meeting at the National People's Congress in Beijing. China's exports had their biggest January-February gain since 2010, even as a measure of economy-wide financing fell to a 7-month low. Exports are still an important growth driver for China, so the pickup should make policymakers less concerned about the disappointment in some of the other indicators, said Louis Quijais, chief China economist at Royal Bank of Scotland (PLC) in Hong Kong. When push comes to shove, they know the recipe to kickstart growth. So if things do slow down to a rate they aren't comfortable with, they can encourage investment. At the same time, February credit data indicate the central bank may be working to contain the expansion in lending and aggregate financing that started last year, said Quijais, who previously worked as an economist for the World Bank in Beijing. Increasing optimism. New local currency loans in February trailed the 700 billion yuan median estimate in a Bloomberg survey and were lower than the 710.7 billion yuan in the same month last year and the 1.07 trillion yuan figure in January. Aggregate financing, a broader measure of credit, fell to 1.07 trillion yuan last month from a record 2.54 trillion yuan the previous month, PBOC data showed. U.S. stocks have risen 8.8% this year, compared with a 2.2% gain in the Chinese benchmark index through March 8, as optimism increases that the world's biggest economy is responding to an unprecedented monetary stimulus. In China, the decline in February purchasing managers' indexes, and official data released over the past week, are raising concerns that a recovery that started in the fourth quarter may be peaking even as house price gains accelerate and inflation risks increase. The Shanghai Composite Index fell 0.4% as of 9:33 a.m. local time. Income gap. China's Gini coefficient, the measure of income differences, was 0.47 for last year, according to the government, higher than the 0.4 level that analysts say signals potential for social unrest. The growth in January-February retail sales was below the lowest economist projection of 13.8% and was the smallest for that period since 2004. The moderation follows a crackdown by new Communist Party chief Xi Jinping on lavish spending by government officials and state-owned companies, part of efforts to curb corruption and waste. Shares of Guizhou Mutai 600,519, maker of the eponymous high-end white spirit, have dropped 19% since Xi took power on November 15, compared with a 14% gain in the Shanghai Composite Index. The increase in factory output compared with the 10.6% median estimate in a Bloomberg survey. The Statistics Bureau doesn't break out figures for January and February retail sales and industrial output in an attempt to smooth distortions caused by the timing of the Lunar New Year holiday. Investment pickup. Fixed asset investment excluding rural areas in the first 2 months of the year rose 21.2%. Against a median economist estimate of 20.7% and a 20.6% pace for the whole of 2012. Consumer prices climbed a more than estimated 3.2% in February from a year earlier. Standard Chartered plc estimates inflation will average 4% this year, compared with the government's target of 3.5%. From a monetary policy perspective, by mid-2013, the inflation issue should begin to move up policymakers' list of things to worry about. Li Wei, the Shanghai-based economist with Standard Chartered, said in March 9 note. Li forecasts the central bank will raise benchmark interest rates once in the fourth quarter by 25 basis points as the CPI rises above 5%.